Good morning. This is Charlene Riley. It is Friday. Yay! It's Friday, August 25th at 8:44 a.m. and I'm recording my trading session. The first thing I want to do is check out the economic calendar, and I see that at 8:30 this morning, about 15 minutes ago, two high-impact U.S. reports came out with the results. The durable goods orders was a worse than expected result, and the durable goods orders except transportation was actually a better than expected result. So that's what's going on in the market right now. There's another high impact U.S. speech report coming out in about an hour and 15 minutes, and a medium impact report as well. During this time period right now, the London and New York markets are open, and when I'm able to trade during this time, I trade using the British Pound USD chart. I use the British Pound USD pair, and I do my trades on the 15-minute charts. Now, what I like to do, I have a spreadsheet where I calculate my daily risk threshold and maximum based on my current account balance, and then along with the maximum number of pips per day and per trade, and the per trade amount and the pips per trade. So my beginning balance today is $989.07, risking 2%. Today I can risk up to $19.78. I'm working with a maximum, I'm using a lot size of 20 cents per pip, so the maximum number of pips for today will be 99. I risk 0.5% per trade, which is $4.95. And so on any given trade, I can risk a maximum of 25 pips using the 20-cent lot size. So now I'm going to my charts, and I see that my fib lines are still good. And now I'm going to still do my multi-frame analysis, and I see that overall the market has, on the daily chart, the market had been in a downtrend. The market had been in a downtrend for the last week or so, but is currently reversing upwards. Then when I go to the 4-hour chart, I again see the downtrend and the market starting to reverse upwards for the last day. And then when I get to the 1-hour chart, I see the uptrend, but that currently it looks like the market is trying to go into a downtrend. And I'm also seeing that my Fibonacci lines are about to expire. Now, when I get to the 15-minute chart, which is where I execute my trades, I see that we had consolidation and then an uptrend, but currently the market is in a downtrend. I'm using a risk-reward ratio of 1 to 1 and a pip value of 20 cents per pip. So the major trend overall is an uptrend, but the current trend is a downtrend. My primary strategy when entering into trades is a breakthrough of support and resistance lines, and those breakthroughs will determine whether I enter into a trade. And then for my confirmation, I usually use the stochastic indicator to the stochastic oscillator to either confirm the trend or a reversal of the trend. And I can also use candlestick patterns. For instance, here we have a morning star, and so we do have the reversal. And since we have the reversal and we're now breaking above the 1.28247 line, I am going to enter into a buy. And I'm going to set my take profit at 10 pips above. So that's 1.28379. And I'm going to set my stop loss at 10 pips below. Okay, so we have the breakthrough at resistance. $1.28247. We have a morning star candlestick nation. And then so based on the candlestick formation and the breakthrough, that is the primary reason that I entered into the trade. I do see that the stochastic is indicating the reversal, but I did not use that as part of my trade decision. So I'm going to remove that indicator window from my trade, from my screen. And so that is my trade setup for this particular trade. I'm going to print the screen, do a screen print, and add that to my trade and journal.